condo apartment completions at about 20,000 units a year. This year, it's slowed down to about 16,000 units. So that's a temporary slowdown.
Right.
We expect that that's going to be moving back up to 20,000 units at least over the next couple of years. So that should help to bring some supply relief to the market, but I would say more so on the rental side than on the resale side. On the resale side, I think the market, in terms of supply relief, is probably going to have to rely more on the mortgage insurance rule changes that came into effect, actually slowing demand down and knocking it down a few notches. And I believe that that's going to happen. I think resale demand, which is at an all-time high right now and growing at 20% year over year, that's not a sustainable rate of growth. And the mortgage rule changes that came into effect, it may be delayed, but they will have an impact on the market because they are fairly significant.
Right.
So that combined with, recent increases in bond yields, which are putting upward pressure on fixed rate mortgages as well, and some general tightening in lending for mortgages,
right,
is eventually going to begin to cool the market down some. So I think you're going to expect to see a slower pace of price growth and sales growth in the resale side next year. But, the new condo market, I would say, probably will remain the most undersupplied segment of the marketplace in 2017.
Interesting. And you had mentioned earlier about the volume completions had gone down this year. Do you feel that has anything to do with any of the trade strikes that we've had? I know earlier this year there was a drywallers strike, so that would have certainly delayed a lot of condo projects. Does that have a big effect?
I think it has. Mm-hmm. I think it has a little bit. So those projects that were scheduled to come up for completion, around now have probably been pushed into early next year. It's had a bit of an impact, but, it is sort of a timing thing. Maybe we won't see as many this year, but that'll be made up next year. So
right,
when you kind of average it out, we're back to normal, but we're in the midst, I'd say, of a temporary slowdown. So it's been very remarkable to see what that impact has been on the rental market, and the fact that we actually rely now on 20,000 units delivered per year. In the past, people were scared of that level. They thought, if 20,000 units came to completion in a 12-month period, it would flood the marketplace. Mm-hmm. And now what we're seeing is that's actually a level that we need in order to keep some sort of level of balance. And knocking that down 4,000 units has actually had the impact of creating very undersupplied market conditions.
So if we think of the purpose-built rental and some of the fact that some of the pre-construction condos, when they go to market, a lot of investors purchase them and they turn them into rentals. Do you see investors being impacted at all by the number of purpose-built rental buildings that are coming up?
Not really. So we talked about 6,000 units being under construction for purpose-built. That's still a very small share of overall apartment development in the GTA. So 6,000 units that are purpose-built, there's over 50,000 units that are condo. At least half of those will be rentals. So still, the bulk of new supply is in the condo rental market as opposed to the purpose-built rental market. And as I talked about before, it's a different kind of supply as well. It's kind of targeting a different renter. And the 6,000 units they'll be coming into the market in stages. So I think at most we'll see 2,000, maybe 2,500 units completed in a year. Mm-hmm. So that's, really just a fraction of the condo deliveries that we'll be seeing. So I really don't think that they're going to have a huge impact. In certain pockets, if it just so happens that the purpose-built rental development is coming to completion at the same time as a few other condo buildings,
right,
then as we talked about, the absorptions might struggle a bit for a little while, and the rents might be artificially depressed for a certain period of time. But after that, the stabilized levels will improve, and the market will kind of return back to where it should be. But, I don't think that the level of purpose-built rental development, at least that we're seeing today, is enough to cause any sort of concern for condo investors that are buying and planning to lease out their units. I will say, though, that there's a lot of interest at the early stages of building purpose-built. We are tracking about 20,000 units today that are proposed for development as purpose-built units.
Okay.
And that's double the level that was proposed a year ago.
Right.
So how much of that actually ends up as being purpose-built rental development is another question, but certainly the trend that we've been seeing is going to continue to carry forward. It's also important to recognize that as this trend towards higher levels of purpose-built development occurs, we're going to begin to see condo completions slow down quite dramatically after 2019.
And
so by 2020, condo completions are really going to drop off. And that's directly related to the slowdown in new condo launches, pre-construction launches that we've been seeing over the past couple of years.
Right.
So there's usually about a 4 or 5 year, at least a 4 year, about a 5 year delay between project launches and completions. So as we move into 2020, 2021, that supply growth that we've become used to is not going to be there. And so I think we're going to be relying more on purpose-built rental development to service the high level of rental demand that we're seeing in the market.
Right. And in terms of the pre-construction, how much percentage would you say in the pre-construction market are people who are end users versus foreign investors versus local Canadian investors?
So we did a survey in our Q3 survey. We send out a survey to all condo developers across the GTA. Their head office or their sales staff or the brokerages that are representing them will report back to us on their sales numbers every quarter. So in the third quarter, we asked them to tell us the percentage breakdown of units sold to date within their projects that went to foreign purchasers, so those with a permanent residence outside of the country, domestic investors, and end users. So the results came back when you averaged it out for the whole GTA at 5% for foreign buyers, so those with a permanent residence outside the country.
Okay.
It came back at 52% for domestic investors, so those that are buying units at pre-construction but do not plan to self-occupy them. They're either going to resell them at completion or rent them out.
Right.
And then the remainder would be the end users. So end users, those that plan on occupying the unit, represent a lower share than investors in today's marketplace.
Right.
So that's not a big change or anything from what we've been used to seeing. And since we've been tracking the completion of condo apartment projects for several years and monitoring how many of those units go into the rental market. So, at least half of a new building in a central area will go directly into the rental market. So that domestic investor share at 52% really didn't surprise us.
Yeah.
And I wouldn't say that we were terribly surprised by that foreign ownership number as well. I mean, we've been talking to developers and brokerages for a while, and that's kind of the number that they come back to us with. Certain projects had as high as 25%. And certainly projects in the core were averaging closer to 10%. But when you look at it for the whole GTA, it did average out at 5%, recognizing that a lot of projects have a 0% foreign buyer share.
Yeah. But,
it really doesn't capture probably the true value of foreign wealth and the impact of foreign demand on the local condo market, because a lot of the so-called domestic investors have earned money overseas, so they're bringing wealth in from other countries and investing it in the new condo market. They're new immigrants who have a cultural attraction to real estate as opposed to financial assets. And I think in a lot of cases, the foreign purchasers have a local relative or an intermediary that they can use, or they have dual citizenship or dual identification. So there's sort of ways around being reported as a foreign buyer, but looking at it from sort of a pure foreign investment standpoint, that 5% number is sort of in line with what we thought it would be.
Right.
Now, if the provincial government came in and decided to put in a foreign buyer's tax, I guess the result would be very little increase in government revenues, because most are filtering the money through a local intermediary, or they're simply not that large of a share, and it wouldn't really have that big of an impact on the overall market as it relates to new condos.
Wow, interesting. So now that you do all of this research on the condo market, do you live in a house or a condo?
I have 3 kids, so I live in a house. It would be kind of tight with the whole family in a condo.
But it's funny because you're talking about how there's larger condos now, and people keep saying we're going to be like New York, where people raise families in condos. Do you buy into that?
I think eventually we'll get there. I think we'll have to. It'll get to a point where single-family home construction will become obsolete almost, and new development will be almost entirely high-rise, and population densities will rise to a point where it will only make sense to live in high-rise units. And, we'll begin to see people renting as opposed to owning, and we'll see a variety of different forms of tenure. So we'll get there. I think we're starting to get there quicker than most people anticipated.
Right.
But I do think we're still quite a few years off of getting to the point where New York is, for sure.
Yeah.
But definitely we're headed in that direction.
Awesome. And what part of the city do you call home?
I live in Parkdale.
Okay, cool. Awesome. And have you lived there for a while before it was up and coming?
About 10 years, so yeah, I've seen it all.
Perfect. So you're looking...
Not at all, but I've seen a lot.
So you're looking for the more gentrification of your neighborhood then?
Yeah, it's changed a lot. These areas that have kind of benefited from condo development, we're neighboring Liberty Village. Mm-hmm. It's brought a lot of commercial investment into the area and more people in general wanting to live closer to the city. So I think it's been a good thing. And we've certainly seen a lot of changes to the neighborhood over the past 10 years. Mm-hmm. And I think it's only going to get better. It's going to improve. And I think, some of these neighborhoods that have been viewed as up and coming still have a long way to go.
Yeah, absolutely. I mean, I live at Yonge and Eglinton, and one of the things that I do like about all of the condos coming to the neighborhood is I think that it will create a much more stable client base for some of the retailers and commercial businesses in my neighborhood, because even though it's Yonge and Eglinton, I regularly see lots of for rent and for sale signs up and down Yonge Street. There's lots of businesses that just can't survive. So I think that having more condo buildings in the area will make it so some of those commercial businesses can survive a little bit longer. So I do think it's a good thing.
Yeah, definitely.
Absolutely. Well, thank you so much for joining me today, Sean. I really appreciate it. Where can people reach you? Is there a place online they could find you, or a Twitter handle that they should be looking for you?
Yeah, contact information is available on the website, www.urbanation.ca.
Okay.
A lot of great information there. You can view our news releases and our data releases and learn about the company. We do have a Twitter account as well at Urbanation, so we're constantly updating all of our followers on what's going on in the condo market. So I do encourage anyone that's interested in keeping track of what's going on to follow us and to visit the website.
Awesome. Perfect. Well, thanks so much for joining me today, Sean. I really appreciate it.
Thank you. Thanks for having me.
Cool. Thanks a lot. Thanks so much for listening to the Morrison Report podcast. If you'd like to follow me, I can be followed on Twitter at Devel Morrison, on Instagram at Devel Morrison. On Facebook, I've got a business page. That's Devel Morrison, Bosley Real Estate. And I can be reached at Devel, Davelle, at bosleyrealestate.com. Thank you so much for listening. If you've got any suggestions of concepts for future shows, please shoot me an email and let me know. Thanks again for listening.
You've been listening to the Morrison Report. Hosted by Devel Morrison, sales representative for Bosley Real Estate Limited Brokerage, real estate investor and best-selling author, bringing you insights on the Toronto real estate market. Join us for another podcast.